Hello! Welcome to What's So Special About a Special Needs Pool Trust and Why You Should Have One. Throughout the presentation, you may hear some items that are repeated. This is not meant to be repetitive. It is meant to highlight some of the most important facts. I encourage you to sit back and relax as I have a lot of important information to share with you. Let's get started. My name is Lindsay Galbraith. I've been working for Arlington Heritage Group going on 8 years now. I love what I do because I see how agencies providing care for individuals in the IDD community sometimes struggle to keep those individuals eligible for their benefits. Arlington Heritage Group provides financial solutions for those agencies and the individuals within their care, allowing the individual to save for the future without having those funds count as a resource against the benefit threshold. Let me share with you 2 more individuals from the company. This is Tom Tierney, the president of Arlington Heritage Group. His financial experience was gained on Wall Street. He joined Arlington Heritage Group in 2007 and developed the company's regional business into one with a national scope. That's me. I'm the Director of Special Needs Pool Trusts. I direct all aspects of Special Needs Pool Trust administration. This is Kim Goodwin, the Brand and Communications Manager for Arlington Heritage Group. Kim joined Arlington Heritage Group in 2018 and is using her marketing experience to ensure that Arlington Heritage Group's message and benefits are clearly and consistently communicated. We are a trust administrator and work exclusively with nonprofits and service providers. Arlington Heritage Group is a family-owned and operated business that was established over 30 years ago. Our company was created from a response to providers experiencing difficulties with end-of-life planning, so we created the Irrevocable Burial Trust specifically for IDD providers. Still to this day, this service helps to remove stress from staff and the financial burden from the agency creating and carrying out end-of-life arrangements for consumers. Our namesake was derived from the eternal flame at Arlington National Cemetery in Washington, D.C. Our logo clearly evokes that imagery and denotes our commitment to vigilance and fidelity in managing money for the most vulnerable populations. We offer 2 services to the IDD community. Today, we will focus on a business-to-business tool, a special needs pool trust service called the Provider Trust. With it, we help providers safeguard benefits and build resources for their consumers. Here is a snapshot of a few of our clients. Currently, we work with over 100 providers nationwide who have made the Provider Trust their choice. Now, here is where we get into the reasons that make a special needs pool trust a necessity. Federal requirements mandate that for a consumer to remain eligible for SSI and Medicaid benefits, they must remain under the resource limit of $2,000. Here, we see items that are considered exempt resources. So a consumer may have any or all of these items, but the combined or cumulative total of these exempt resources cannot go over the $2,000 resource limit. If this happens, benefits will be jeopardized. Providers often work tirelessly to keep their consumers under this resource limit, but in current times, this has been more challenging. Starting with the stimulus money of $1,200 that was received in April of 2020, federal guidelines stated that this money would not count as a consumer's resource for 12 months, and the grace period is expiring this month. Additionally, stimulus money for $600 was distributed in January 2021, and $1,400 was just issued this past March. Alongside stimulus funds, extra money is being stored in consumers' checking accounts due to inactivity and immobility caused by the COVID-19 pandemic. Traditionally, to keep consumers below the $2,000 resource limit, providers use the practice of spending down excess funds, But there is a better way to help consumers keep any amount of their money and still maintain their benefits. This is where the special comes into play with a special needs pooled trust. We have long since recognized that special needs deserve special solutions. In 1993, the government created the OBRA Act that allowed nonprofit agencies to use a trust where their consumers, disabled by SSI criteria, could place their excess money, and this money would not count towards the resource limit. The legal guidelines for this state: the trustee must be a nonprofit 501c3 entity. Consumers who use the trust must be disabled as per SSI criteria. A trust account must be created by a parent, grandparent, legal guardian, court, or the individual him or herself. The money placed into a pooled trust account is irrevocable and therefore is not counted as a resource by the Social Security Administration. Money in the trust can only be used for the sole benefit of the individual. While this was an amazing financial ability created for the IDD community, most providers did not readily adopt this tool due to the expensive costs of developing a trust and the technical knowledge needed to run the trust. In the early 2000s, Arlington Heritage Group came up with a great solution. We created the Provider Trust. Basically, we invested in the creation of a special needs pooled trust prototype that providers could adopt as their own. The provider becomes the trustee and leans on Arlington Heritage Group to guide them through the adoption and the day-to-day running of the trust. This slide is the only one in the presentation that I will read verbatim. Arlington Heritage Group helps to improve the quality of life for people with disabilities by working exclusively with human service providers who protect the financial Medicaid and SSI eligibility of their clients, consider their future needs, and often must paradoxically spend away consumers' savings to protect benefits. The Provider Trust is a qualified special needs pooled trust and helps providers save virtually any amount of money for consumers while safeguarding benefits. The Provider Trust also allows providers to financially support those they serve that have no resources with a remainder account. Because there is no Medicaid payback to this trust, funds retained in the remainder account can be used for others within their IDD community, offering a true charitable purpose to the trust. The adopted Provider Trust becomes an essential tool to both agency and consumers. As already discussed, it allows consumers to save excess funds and still maintain eligibility for benefits. It eliminates the practice of spend downs that waste staff time and consumer funds. This is ideal for consumers who moderately exceed the resource limit, as well as consumers who receive a large sum of money in scenarios such as inheritance, settlement, retroactive payment, or other similar situations. By law, the reason why this type of trust can only be used by a nonprofit provider is due to the charitable function built into it. When a trust account owner, the consumer, passes away, after final expenses are paid from the individual's trust account, the remaining money is then retained by the overall trust in a remainder account. This is controlled by the provider as the trustee, to use for any person in their community, whether they have a trust account or not. The only standard is that the recipients must be considered disabled by SSI criteria. This is because this type of trust has no Medicaid payback. Without this trust, when a consumer passes away, whatever money is left behind moves to the consumer's estate. Then Medicaid will make a claim to repay benefits that had been given, which will most likely deplete the funds in the estate. The Provider Trust is a one-of-a-kind platform offering advantages to providers and consumers that ABLE accounts and other trusts cannot match. It is a business-to-business solution, bringing control and transparency to the provider as the trustee. Trust administration, compliance, record-keeping, and training offered at no cost to the provider by Arlington Heritage Group. One of the unique features to the Provider Trust is the ease with which it can be set up. We call it the trust-in-a-box concept. The effort, time, and capital expense of developing your own compliant special needs pool trust has already been done for you. You simply unpack the box and get things going. The box concept brings you a fully developed trust that is compliant with Social Security and Medicaid. Trust allows your consumers to save any amount of money and remain eligible for their benefits. Helps providers support those in their community that may have no resources. No cost to providers and a low cost to consumers. Arlington Heritage Group acts as trust administrator, taking care of the day-to-day operations for the trust. This trust-in-a-box concept is a qualified special needs pool trust that is compliant with Social Security and Medicaid. The trust allows consumers to save any amount of money and maintain eligibility for benefits. It helps to improve outcomes throughout your program with things like the remainder account and the elimination of spend downs. We put the provider in charge as the trustee, and we fully support the day-to-day functions of the trust. Arlington Heritage Group provides this trust at no cost to providers and minimal cost to consumers. Also, there is no need for the provider to add extra labor or capital to run this trust. Because this type of trust is not subject to Medicaid payback, by law, 501c3 organizations are the only entity that can operate a special needs pool trust due to the charitable function written into the purpose of the trust. Since the Special Needs Pool Trust allows your consumers and their family and friends to save and contribute any amount of money, future needs become an easier possibility. As an example, funds could be used for a medical procedure not covered by current benefits, and saving for larger items becomes possible too. Items like a cell phone, tablet, transportation, vacation, or adaptive equipment to allow a consumer to age in place. Money is to be used for the sole benefit of the trust account holder and is meant to improve their quality of life. Creating your own special needs pool trust has never been easier. We guide you through the entire process, reviewing and adopting the trust documents, establishing your trustees, selecting an investment profile, offering all the necessary documents and training for the daily trust activity, and we become your trust administrator, taking care of the day-to-day running of the trust. We consider a provider-controlled special needs pool trust a best practice for improving the quality of life for those in your care. Money from a trust account must never go straight to the consumer. Rather, distributions are made payable directly to the vendor providing the goods and services or reimbursing a third party for purchases made on the trust account holder's behalf. Here's a list of potential distributions. While this list is not comprehensive, it gets the ideas flowing. Basically, if the distributed funds are for the individual and for the improvement of their life, you can use your imagination to determine the possibilities. Before our presentation concludes, I wanted to quickly talk about ABLE accounts. ABLE is also an exempt resource, just like a special needs pool trust. ABLE accounts are mostly used by individuals and families who are not supported by an IDD provider. While both instruments are similar, the ABLE program has some drawbacks and limitations. Here's a quick comparison for the Provider Trust versus ABLE accounts. For a consumer to qualify for an ABLE account, the onset of their disability must have occurred by the age of 26. The amount that a consumer will be able to save is only $15,000 per year. There is also a restriction on the amount that can be saved over a lifetime, which varies by state in accordance with that state's rules for ABLE. Also, SSI benefits will be affected once an account balance reaches $100,000. There can also be tax implications on an ABLE account for certain distributions. And lastly, upon the death of the ABLE account owner, funds remaining in the account are paid to the estate and then are subject to Medicaid payback. Also important to note, ABLE is not a business-to-business tool and does not offer the needed reports and support a provider needs. The Provider Trust just works better on so many levels. It's a business-to-business solution which brings both control and transparency to the provider as the trustee. Trust administration, compliance, and record keeping comes at no cost. Unlike ABLE, there are no age or contribution limits for the beneficiary. It is not subject to Medicaid payback. The remainder feature is unique to this trust instrument. We are nearing the end of our presentation, so to wrap up, a special needs pool trust is easy to create with Arlington Heritage Group and the Provider Trust. It puts the power into the provider's hands to resolve maintaining consumer eligibility for benefits while saving any amount of money. This, in turn, eliminates the need to wastefully spend down consumer funds. This is a no-cost service to the provider and has a low-cost structure for the beneficiaries. And the charitable aspect of this trust via the remainder account gives the provider the ability to support individuals that have scarce resources within its community. The remainder account is something that builds over time. We have found that typically within about a 5-year span, this portion grows to about 8 to 12% of the total trust principal, which is used at the provider's sole discretion to support individuals within its community. The only guideline is that those supported must be disabled via the criteria set forth by the Social Security Administration. We have reached the end of the presentation, and I hope you have found it informative. Please feel free to email Kim Goodwin your comments and questions. Her email address is on this slide. Even if you have no questions or comments, still email her to be entered into a drawing where one winner will receive a $150 gift card. All emails need to be received by May 5th as the drawing will take place and be awarded on May 7th, 2021. If you would like a copy of this presentation for yourself or to share, please just include that request in the email to Kim. This last slide has contact information for our president, Tom Tierney. Thanks again for attending What's So Special About a Special Needs Pool Trust and Why You Should Have One by Arlington Heritage Group.